For section 3-3, we're going to be looking at more transactions, specifically transactions that affect owner's equity and certain asset accounts. So first transaction, we received cash from sales. Received cash from sales. This is my favorite entry, and you'll see why here in a second. So you'll notice here that with our T-charts that we learned about in chapter 2, we would debit cash because we received cash. Assets increase with a debit, 1,100. And then we would credit sales because we only credit sales because it only can increase. So we have cash and sales. Now this is unique or special because both of these accounts have special account columns. So we have our sales credit and we have our cash debit. So we don't have to write anything in this account title column because we're using two special accounts. So we have our credit, and you'll notice that we have two check marks. So we can't just leave this line blank, the account title section blank, because someone who's looking over our work might think that we just forgot to write an account title there. Instead, we'll write the check mark in the account title column and the check mark in the post-reference column to show that you need to move over, and you'll see that we have sales credit and cash debit. So the source document for this transaction is a calculator tape. So T10. And on your reading guide, it will say this is the total of all cash sales transactions of the day. So we only do this transaction one time a day. At the end of the day, you're totaling up all the money in the cash register and doing one transaction. Our next transaction, we sold services on account. So sold, right away, if you see the word sold, we have sales. It doesn't matter if we're selling, we sold services, we sold jewelry, we sold basketballs, it doesn't matter. If you see the word sold, we're going to have the word sales. So in this situation, you'll notice we didn't get any cash. Instead, we told Main Street Services, we'll give you 30 days, for example. So I think of this as we're eventually going to receive money. So we use the accounts receivable. We're eventually going to receive money, accounts receivable. Accounts receivable is an asset, so it's increasing with a debit because we're adding more to the amount that they owe us. And then we always at the time of the sale, whether we get cash or not, we use the account sales credit at the time of the sale. That's one of those GAAP rules that we learned. So we have our date, a debit. The account title is labeling what's in our general column. So accounts receivable, a debit of 500. Then we have our credit to sales for 500. The only thing we could do to sales is credit, so we only have the sales credit column. And then finally, our source document for this transaction is a sales invoice. So remember that sales increases owner's equity. We learned in chapter 1, we put everything into owner's equity. Now we have a special account just for sales that increases owner's equity. Transaction C, we paid cash for an expense. So you'll see on your note guide that we have two different expenses listed there in the picture of the transactions because expenses all look the same. So we'll go through this one together. The date, we're always going to debit our expenses for $80. And since we paid cash, we have cash credit for $80. And then paid cash, anytime we pay cash, we have to write a check. So we have check number 4. Our next slide is going to look just the same. It's a different expense, equipment rental instead of communications, but it doesn't change. Our expenses are still debited, and we're still crediting cash. Check number 5. So the source document when we pay cash for an expense is a check because we are writing a check. 2 more transactions for section 3-3. The next one, we received cash on account. So if we receive cash, love when that happens. Assets increase with a debit, so we're going to debit cash for $200. And then we're going to credit accounts receivable in Main Street Services, which is also an asset, which decreases with a credit because we used to owe them $500 from an earlier transaction. Now we paid them $200, so we need to owe them $200 less in our documentation. So we have our date, the 16th. We are going to debit cash because we received cash. We are going to credit accounts receivable, Main Street Services. So remember, whatever is in the accounts title column is labeling the general column. So it's a accounts receivable, Main Street Services credit of $200. Then finally, we have our source document, R2, which is receipt number 2 because we received cash. So when we receive cash on account, this is in your note guide, a customer has already received the service. So no sales account, and the sales account has already been credited. We did that in an earlier transaction, in transaction B. So we already recorded the sales. Now we're recording receiving the cash. They eventually received the cash, accounts receivable. So we credit accounts receivable to reduce it. The last abbreviation there, or last bullet, it says we can abbreviate accounts receivable as AR. So you could just write AR, or you could abbreviate it the way that the book does, ACCTS, period, REC, period. So 2 ways you can abbreviate accounts receivable. Our last transaction for 3-3, we paid cash to the owner as a withdrawal of equity. So remember, in your note guide, it says, remember, a withdrawal is when the owner basically writes a paycheck to him or herself to use the money for personal use. Why else would you run a business if you didn't want to use that money outside of the business? So a withdrawal, it decreases owner's equity. So it decreases the value of the business, but that's not a bad thing. That must mean that you're making money and you can take money out to use for personal use. So we paid cash. So right away, I know we have check number 6. Anytime we pay cash, we have a check. So we debit our drawing account because it's a withdrawal. Withdraw and drawing go together. We always debit drawing. And we're crediting cash because we're paying cash. So the date is January 16th. Our debit, Michael Delgado drawing, is associated with the general debit of $350. We have cash credit for $350. And then finally, we need to put our check number. So that is section 3-3. There are 4 questions at the bottom of your note guide. The first one asks, when cash is received from sales, which account is listed on the first line of the entry? That's kind of a little bit of a trick because we're not writing an account name. We are putting a check mark showing that we have cash and sales. So that is question number 1. Answer the next 3 questions, and that is section 3. Question number 2 asks, when services are sold on account, which account is listed under the account title? Well, when we sold services, so we know we're going to use the sales. So that is that, and then we write accounts receivable because we're eventually going to receive money. So you could write AR for question 2. Question 3, when cash is paid for any reason, what abbreviation is used for the source document? Remember, when we pay cash, we write a check. So the abbreviation for a check is C. Finally, when cash is received on account, which abbreviation is used for the source document? We receive cash, so that's a receipt, and we abbreviate that with an R. And that is section 3-3.